Tokenized assets is going to be the next megatrend of our industry. You have unbelievable trillions amount of dollars come on chain.
Sort of like pushing DeFi closer to that institutional world and pulling it closer as well, which has been incredible to see for the entire industry.
If they build tokenization and then they deploy crypto solutions, that they're not going to run into any ambiguity issues that's plagued our industry for its whole existence.
Welcome back to the Rollup. I'm Robbie.
I'm Andy. Robbie and I met at the University of Florida in 2017, where we first found out about digital assets.
We learned a lot along the way, and we're bringing you face to face with the leaders of our industry.
Sit back, relax, and enjoy today's episode.
Welcome back to the show, man. I think the last time you were on the show was SmartCon. I got that right?
In person.
Yeah. It was incredible, man. I think SmartCon was one of these pivotal experiences in the last year, or maybe you've seen this from the Rollup. We're pushing and we have this thesis that the legacy financial space is being forced to innovate. They're being forced to not only pay yield, because stablecoins are able to do that according to Genius and maybe Clarity, but also neobanks, fintechs are kind of coming for their lunch. On the other side, DeFi, a lot of DeFi infrastructure slop has not found product market fit. And they're being forced to kind of take a look in the mirror and say to themselves, hey, we've got to go out and find product market fit, like a company like Chainlink. This convergence between these two worlds, we think is going to end up in what we're calling like these business-driven tokens, these neobanks, these modern fintechs, and generally we're calling this category neo-finance. And, Chainlink has been crucial to this. And what I was saying is that SmartCon was a pivotal moment where I think Fidelity was in the room, BlackRock, DTCC, all of these guys were at SmartCon, but at the same time, Chainlink, like this DeFi Goliath, was the one that was putting her on this whole conference. And it felt like you guys were squeezing these two worlds together. Like I can just picture like these two atoms and like an atom bomb. You guys are fusing the two worlds together and like giving birth to this one new world of neo-finance. And you guys have done a tremendous job of this. I think today I want to talk about how Chainlink's acquisition of Atlas helps to fulfill the vision that you guys are ultimately looking to achieve. Give us a sense, high level, what has it been like since you were last on the show at SmartCon? Give us a sense of what the vibes at Chainlink have been, and then we'll dig into the nitty gritty behind Atlas and how this helps Chainlink's positioning with SVR.
Yeah, definitely. And I got the same exact sense as you did at SmartCon, where you had both the DeFi, DGen Web3 developer, the Aves of the world, mingling together at a Fidelity-sponsored conference with BlackRock and Swift and JP Morgan and all these employees and, the people at these institutions who aren't just, interested in Web3 and crypto and blockchains, but their title is, head of DeFi, head of crypto, head of stablecoin. Like they're actual divisions now within TradFi institutions. And I think things have really only accelerated since then. We see the New York Stock Exchange announcing tokenization. Larry Fink's at Davos talking about tokenization, how it's going to change everything. Like it's only accelerated, and I think that a lot of the attention on crypto is also increasing just due to the discussions of the Clarity Act getting the market structure bill through. That's going to provide a whole lot of clarity that the institutions need to feel comfortable that if they build tokenization and then they deploy crypto solutions, that they're not going to run into any legal issues or ambiguity issues that's plagued our industry for its whole existence, pretty much. Once we have that market structure, and that market structure is one part of it, but it's also just the rights and the clarity around tokenization and tokens and self-custody and wallet interfaces and like how do you treat each entity. Once there's that clarity, I think that'll be the real unlock. And Chainlink's role in this world is just providing the infrastructure and the connectivity layer that enables an institution where if they want to tokenize an asset or build a DeFi style application, they're going to need the data to power that application. They'll need identity verification. They'll need the cross-chain connectivity. They'll want to be able to connect in their existing backend systems and their existing Swift messaging standards. Like they need this compatibility layer, this translation layer is usually how I like to think of it. And Chainlink's perfectly well suited. It's already the standard within DeFi. Aave, all these massive applications are been able to scale to the level that they have been able to get to today because they were protected by Chainlink data the whole way. And Chainlink being already the standard within DeFi, it's very easy to translate that to TradFi and say, hey, these standards are already being adopted. They've already been proven over the past half decade. You adopt these standards and you can speak the DeFi language. And you can put in, permissions and identity verification and all the stuff that institutions specifically need. But it's the same data standards, it's the same infrastructure, the same protocols. And I think more and more of institutions are realizing they don't need to reinvent the wheel when there's already this proven infrastructure out there. And I think this vision is just accelerating.
Extremely well said. And the only part I'll add here is that in addition to TradFi being able to speak the language of DeFi because you are ubiquitous, Chainlink is ubiquitous with its price feeds across DeFi. Chainlink, you and Sergey, are doing the work to go into the legacy financial world, go to Wall Street and speak their language, learn their language, adopt it, speak it fluently, go into DC, do the same thing, speak the DC language to get regulation done. So absolutely. And in addition to going into that world and pulling them. So it's sort of like pushing DeFi closer to that institutional world and pulling it closer as well, which has been incredible to see for the entire industry. And you guys have not abandoned your DeFi roots. I think there is still very deep technical rigor and infrastructure that is taking place here. So it's not like you guys have gotten complacent. Job's not done on the infrastructure layer. This acquisition of Atlas speaks to how invested you guys are still in the MEV pipeline, in SVR. And Zach, I think you do a tremendous job at simplifying some of these more difficult to understand concepts for the layman, because there's a significant community that stretches far and wide. Give us the quick and dirty on SVR, and we'll talk about why Atlas is so crucial to further Chainlink's goals with it. Halliday is unified crypto payments. Give your users more wherever they are. Go to halliday.xyz to never write a smart contract again.
Looking for yield that stands out? infiniFi gives you just that. Deposit stablecoins and earn far more than the current savings rate. infiniFi is a battle-tested, reliable DeFi platform that is ready to go. Head to infinifi.xyz. Trade on anything: economics, weather, sports, crypto, and more. All on Kalshi.com, 24/7 for the world's biggest prediction market.
Yeah, definitely. I can provide a little bit of like a TLDR breakdown, because the Atlas acquisition is definitely, you need to have a little bit of context. The way I put it is that typically when you have a loan in DeFi and it needs to be liquidated, the way a protocol does that is it sells the collateral at a discount so that some MEV bot can come in, buy it at a discount, pay down the debt, and keep the protocol solvent. This is very, very critical to the solvency and the health of the DeFi economy. Anytime that there's a position that needs to be liquidated, it needs to be liquidated quickly, accurately, and safely to protect all of DeFi. In order to incentivize liquidations, protocols will pay a liquidation bonus, which is this discount. And that money typically gets kept by MEV bots and L1 validators. And a lot of this liquidation MEV, as it's called, gets leaked over the years. I think the number is about $300-400 million over the past few years has been leaked. Now, this value, these protocols are purposely paying for liquidations to happen. It's really important, but it's expensive. I mean, that's a lot of money that you're leaking out to these third parties who are keeping this value. So what Chainlink SVR is designed to do is that it's effectively an extension of Chainlink price feeds. So when a loan needs to get liquidated, what typically happens is that a Chainlink price feed will update. It'll say that the price of ETH is now 2-5% lower than it was before. This position's now marked for liquidation. And typically this auction of who gets to liquidate the position happens on a blockchain. And the blockchain validators and MEV bot keeps the profit. And what SVR does is that it shifts the landscape such that rather than the who gets to liquidate the position auction happening in the blockchain, now it's happening in the Oracle network. So now all these MEV bots are bidding for the right to liquidate a position, and that value is now being captured by the Oracle network. And the Oracle network, which in this case is Chainlink, can redistribute that value back to the DeFi application. So to date, Chainlink SVR launched in March 2025, last year, together with Aave, the biggest DeFi lending protocol, and it's recaptured over $10 million in liquidation MEV to date. And that's split at a ratio between Chainlink to keep sustainable Oracle networks continue to operate, as well as returning that value back to the Aave and the Aave community and the Aave DAO to use it as they want to. And this has also expanded over time to being adopted by Compound and various other lending protocols. So the whole point here is that DeFi lending applications have been leaking a lot of value during the liquidation process. And Chainlink SVR is designed to recapture that value and return it back to the DeFi application.
Makes complete sense. The DeFi protocols have to maintain solvency as their number one priority. And like you said, they have to fire sale this collateral when it becomes bad, right? This bad debt. They have to sell the collateral to maintain solvency in the market. But they sell it at a discount. They don't need to sell it at so steep a discount. And that's where the leaky value comes in. They can sell it for a little bit of a discount. And this SVR Oracle auction helps, the MEV bots come to a more fair price rather than, really taking advantage of the lending market itself. And so give us a sense of, you mentioned over $10 million has been saved so far as a result of these integrations with Chainlink SVR. How does Atlas fit into this equation? And how are we going to help to scale 10 million to ultimately 100 and $1 billion of SVR saved?
Yeah. So Atlas, what that is what it's called a order flow auction protocol. So it's the actual protocol that's doing and facilitating the auction itself. And SVR has operated on Ethereum mainnet since it launched initially, and the integration, the merger, so to speak, between Atlas and SVR is designed to bring SVR to more blockchains, to the whole ecosystem. So with the announcement yesterday, SVR went from being live on Ethereum to now being live across 5 different EVM chains, and it can scale to any EVM chain that lending protocols are on. So it's really about just kind of accelerating what SVR is already doing. And I think this whole concept of OEV is interesting because I think it shows a clear pathway to how data feeds and price feeds can be monetized in a way that's not actually extracting value from anyone. Mm-hmm. I think when people think of MEV, they think front running, they think sandwich attacks, like, oh, who are you taking the money from? Mm-hmm. But in this case, the money is coming from MEV bots and L1 chains. And it's not coming from the users. In fact, it's actually returning value back to the users, back to the applications. So it's almost like this win-win dynamic where Chainlink oracles are able to operate more sustainably because of this source of revenue. And the DeFi applications and the DAOs have a new source of sustainable revenue that they can put towards building a better lending application. And MEV bots still get paid their share, blockchains still get paid their share, but they're not getting 99% of the liquidation value. They're getting a more equitable amount of value for the work that they're doing in those liquidations, right? So I think that OEV, well, it's a very kind of niche kind of concept. It's like the liquidation plumbing of the DeFi economy. It's taking something that was very extractive and just leaking value to third parties who were just running liquidation scripts to now returning it back to the infrastructure that's actually securing the loans and facilitating the loan making process, which for me just seems like a more fundamentally fair deal for everyone involved. And I think that's when people hear MEV, they don't necessarily understand that you're actually creating a more fair distribution of value.
I think you make a great point. There's some people that might say, hey, like I run an MEV bot. I'm a person too. I want my fair share. But the result is MEV bots are still getting their fair share. They're just not extracting as much from these users as they were. But the MEV bots are still doing quite all right. I think this is extremely forward thinking for a couple of reasons. One is, obviously the multi-chain world is proliferating and we're seeing a lot of DeFi happen on multiple chains. So this acquisition makes a lot of sense to scale the Chainlink SVR approach. On the same note, we've got a swath of assets that are going to be tokenized. Like you mentioned earlier, New York Stock Exchange, is tokenizing. They're coming 24/7. We're seeing it happen. The RWA space, the tokenization space is taking off. This is a segment that's poised for a ton of growth. Earlier, we had Jim from Superstate. They recently raised 82.5 in a Series B. Incredible to see. And this, again, just helps to validate, where we see the space heading. With this new asset class that is going to be onboarded, we're going to get equities, tokenized equities. We're going to get, tokenized gold and precious metals. And I'm curious to hear how you react and how you think about the scale of the DeFi landscape as a whole when we start to get, more tokenized money markets, more tokenized precious metals, more tokenized equities, and they become tokenized and composable with all of the same DeFi functionality. There was an example earlier. Someone borrowed $42.5 million of USDE from the Athena stablecoin and used it to purchase Tether Gold, right? XAUT, right? Which I can only imagine is going to continue to proliferate these types of use cases on Aave and Aave Horizon with their RWA protocol, powered by Chainlink. Like, with RWAs and the scale of tokenized assets entering the DeFi landscape, how do you react, and how do you think Chainlink is thinking about like where we're going and how we grow from here? Go anywhere on chain instantly with Relay.link. Relay is closing in on $10 billion transferred. Go to Relay.link to bridge your assets now.
Not your keys, not your coins. From the team that pioneered cold storage, Trezor has just released its new wallet. Guys, if you are still using hot wallets in 2025, 2026, you are missing the entire point. Secure your coins. Get a Trezor at Trezor.io.
Yeah, that's a great question. I think in my mind, and maybe this is self-evident to everyone listening, but I think tokenized assets is going to be the next megatrend of our industry. You have just unbelievable trillions amount of dollars to come on chain. But I think when you think of why do you want to bring equities and stocks and bonds on chain, just bringing the asset on chain and then the asset just sits there is not that useful. It's useful when you can actually do things with those assets. For example, putting them into an Aave Horizon market and being able to borrow stable coins, or using it as collateral in a perps position and doing a delta neutral trade. Like, it's interesting when you can do things with it. I think what Chainlink does, the service it provides to asset issuers, is utility. And it does that for stablecoins. It does that for governance tokens and utility tokens. But it can do that, and it is doing that for tokenized assets as well. Of, okay, you've issued the asset, you have the proof reserves and the NAV data and all the necessary data. In order to make that useful, you need to be able to list it on Aave Horizon. You need to list it as a perp market. You need more data. You need more integration. And Chainlink is kind of this facilitator connecting the assets to the applications and providing more utility to those assets. So Chainlink plays, I think, a lot of roles within this new tokenized asset economy. But I think one of the big roles is making these assets more useful by being able to offer, hey, you're tokenizing a bunch of equity or a bunch of debts. Chainlink's already integrated as the standard across all of DeFi. For example, Aave Horizon, you can come get plugged into Aave Horizon, and Chainlink will provide the NAV data, the proof reserve data, the cross-chain interoperability to move it between the different lending markets. Like, it'll provide the glue that connects that asset into the lending market. I think that, in my personal view, DeFi is exceptionally useful, and it's been a great case study for what a tokenized asset economy will look like. I think a lot of these applications in DeFi today have been used for assets of maybe questionable value, so to speak. I think that there are blue chip assets, but I think there's also a long tail of things that people just want to speculate on. But we as an industry can very easily hot swap in tokenized assets as the asset layer and keep the same protocol layer. Maybe you need to add identity verification for permissioned assets. Maybe you need to add some more compliance tooling for the more sensitive jurisdictions. But it's the same infrastructure at the end of the day. And so the same role that Chainlink provides of securing 70% of the DeFi sector is going to translate one-to-one to securing hopefully 70% more, of the tokenized asset economy, which is what Chainlink is building towards. So it's the role that Chainlink plays within this new tokenized asset economy is the same role that it's been playing and has been proven to excel at within the DeFi economy. So I think I can't be more bullish on the tokenized asset economy personally, and I think that Chainlink is very, very well positioned to be the plumbing of this new economy.
Yeah, I like the mental framing a lot of the asset layer. We've built out the protocols. We have all these blockchain layers and all of this plumbing in terms of the infrastructure. And I think you're absolutely right. We failed, to see that what's now missing is the assets, have to be just quality. We have to have quality assets. And for so long we've had, we do have our blue chips, right? But that we do have thousands of long tail assets that don't belong in the typical investor's portfolio, right? And so I think that is coming to a lot of people's forefront of their mind. We're also seeing in the Wall Street world, they're realizing all of the infrastructure that is here, and it feels like we're putting some of those final touches on, like those KYCs and those privacy elements. Those are starting to click into place, and when they do, it becomes fully ready for this asset layer to migrate on chain. And we're seeing it happen right before our eyes. And Chainlink is a centerpiece of that. And so Zach, just, I'll hand it over to you to close us out and give us some closing thoughts on what's ahead for Chainlink in 2026 and beyond.
Yeah, I think a lot of it's going to be somewhat similar in terms of continuing to secure the DeFi economy, offer new products like bringing SVR to more blockchains so that more lending applications can recapture value. But I think a lot of it's going to be focused on bringing institutions into production, getting them to a state where they can start to issue their assets at scale on public chains, on private chains, on whatever kind of environment that they want, using Chainlink as this orchestration layer to kind of facilitate the connectivity between their existing systems and their standardized approach of issuing assets, that they have trained thousands of employees and paid millions of dollars for their existing systems. They're going to want to reuse that in this new context of tokenized assets. Chainlink provides that translation layer, as well as providing all of the infrastructure for the applications that exist on public chains, both today and the applications that are going to be created in the future as a result of tokenized assets being brought on chain. So I think that tokenized assets adoption is only going to accelerate. Hopefully, the Clarity Act and Market Structure Bill gets enacted, and that provides the necessary clarity that industry needs. And I think that that's ultimately only a positive dynamic for Chainlink. That this recent acquisition of Atlas, it's focused on DeFi, but again, DeFi lending is in the tens of billions currently. If we're able to bring on tokenized assets, now DeFi on-chain lending can be measured in the trillions of dollars. And so the proportional value capture of the oracles and of the DeFi applications can scale with that linearly. The more liquidations that's happening, the more MEV to recapture, the more that gets captured in the Oracle network and returned back to the application itself. So I think that people are very bearish in the current environment, everything after 1010 that's happened. But I think the protocols that are building the infrastructure that will be used by tokenized assets have never been better positioned.
Absolutely.
We just need to, to my previous point, get the high quality assets on board, get the institutions engaged in these applications, and we already have all the infrastructure. Like we've been building this for since really DeFi summer, and so we just bring in the proper assets that people want to access, and all the infrastructure's there. So I'm very optimistic. I hope everything plays out. This year, tokenized asset adoption goes vertical. I think it may take a few years to fully ramp up, but I think this will be the year that things actually go into production in a meaningful way. So I'm very optimistic.
Yeah, and there are protocols that are well positioned to capitalize on this growth of tokenized assets and the growth of stable coins, which the powers that be are saying again trillions, and that's where we're headed. Zach, Chainlink God, thank you so much. Always a pleasure having you on the show, and looking forward to really this neo financial world that's taking place right before our eyes in 26 and beyond. We're going to see you again soon, Zach. Really appreciate you coming on and stewarding the Chainlink community forward. So we'll see you again next time. Always a pleasure, man.
Appreciate you having me on. Thanks, Robbie.
Absolutely. See you next time. Thanks, Chris. Thanks, Zach.